All right, happy Sunday everybody, and happy Easter to everybody. We're going to be doing a markets look ahead stream and also briefly touching on the housing market. Things are getting pretty crazy here with rising interest rates. We're seeing a little bit of pressure on the price of single family homes and even commercial real estate. But what does all this mean? We'll piece that together tonight, and we'll talk about one way that is a proven, tried and true sort of strategy that'll help any prospective real estate investors break into the market. Because let's face it, it is getting harder than ever to actually acquire a property, especially if you are younger. Maybe you are trying to pay off student loans, maybe you have credit card debt. So we are going to discuss some strategies that have worked and that actually I've used in my personal life to help acquire assets and help offset some of that cost burden by house hacking. So we will talk about that tonight. But first, Monday is going to be an action-packed day on Wall Street. The majority of the financials, so you think about any of the big investment banks, so Bank of America, Bank of New York Mellon, Charles Schwab is also reporting on Monday. But I think the most important piece of economic news we are getting on Monday is from the National Association of Homebuilders. They are releasing their annual index for April. The consensus, so if you talk to the majority of analysts on Wall Street or the economists, everybody is estimating about a 77 reading, and that would be 2 points lower than the March figure. But the index has declined for 3 consecutive months as surging mortgage rates have made home builders less optimistic about the housing sector in general. Because as we know, as those interest rates move up, it costs more to purchase a property because your monthly payments will go up. But we'll talk about that a little bit more tonight. So let's see who we have on this Easter Sunday stream. We have a guy in Back Bay. Says, yo, Tom, Bike is here. Good to see a Bike. Welcome, Chris Beeman. Happy Easter to you too, Chris. Thank you for being here. Sally says hi, Tom. Mike Aiton says hello, everybody. My good friend Otto, welcome Otto. Dutchman says happy Easter. Sally is here, good to see you. Welcome, Sally. Chris Beeman, it's a pleasure as always. Corey says hope you're doing well. Michelle K says good evening, and good evening everybody. Welcome. Jamie Price, good to see you. Cynthia says what are student loans and credit cards? I know. Dante Rose says hey Tom, I see you picking up my car. Good to see you, Dante. So we are in downtown Miami, but we are near the Omni at the Ferrari dealership. So I had to take a little bit of a detour because I believe there is a Miami Heat game going on right now and the road is closed. So we're going to be taking a little bit of a detour, and I just came across this pretty interesting Ferrari dealership that is very similar to the one we have in Manhattan that we always walk past on Park Avenue. Alex Gary says, how much do you have left to pay off on your house in Miami? About $300,000, about 300 grand. Lee Arnold says, happy Easter, Tom. Thank you, Lee. I appreciate it very much. Dante Rose says, Tom, almost a year. I know you. Good to see you, Dante. Welcome. Sebastian, good to see you. So I think that's going to be the main topic for the stream, because I've been getting a lot of emails recently about people trying to break into the real estate market. And I think the last thing that you want to do is start to FOMO in, or what they call fear of missing out. Because I've been seeing a ton of rookie mistakes out there. And I think the number one mistake that I think people are making right now is getting into bidding wars with other buyers, right? Getting into bidding wars with other buyers. You never want to do that, because 9 times out of 10, you're probably going to be overpaying for that property. Number 2, the biggest rookie mistake that I'm seeing is people actually making offers on properties that they haven't even walked yet, or that's calling making an offer sight unseen. Horrible, horrible mistake. I would never advise doing that for reasons we'll talk about later in the stream. And number 3, the third reason, hold on guys, I think we gotta, so if you see here, we gotta make a detour. I don't think we're allowed to walk here. So we're gonna walk around the street, across 15th Street and down near the Omni. So the third mistake that I'm seeing a lot of people making right now is they are waiving all of the necessary home inspections. Now, you never want to do this, because let's say you waive all the home inspections and you buy that property, and then you find out there's structural damage, there's mold, the property has termites. Well, now you are in a world of hurt, really world of hurt. So you never want to do that. You want to be patient. You want to make sure you go through all the rudimentary metrics that goes into buying a home, because when the housing market is white hot like it is right now, you know, a lot of real estate agents will try to push you in the direction of doing something that may not be in your best interest. They may say, look, I'll send you a video of the house, but there's so many people at this open house, we have to make an offer right now. And they'll try to push you to do things that may be not in the best interest for you, but in the best interest for them, just because they want to make a commission. Now, I'm not saying all real estate agents are like this. I actually think the vast majority of real estate agents are not like that. But I think as a buyer, it's just like trading stocks, it's just like trading equities. You got to make sure your head is on straight and you're going through all the necessary procedures necessary, including homeowners inspections. So do not waive an inspection ever. One of my friends that actually just bought his property, he told me, he's like, I had to waive the inspection, or I couldn't get it, I had to waive it. And I'm like, dude, never, ever waive the inspection. He did it anyway. So we'll see what comes about after that. But let's see who we have in the chat. Hey, El Feo, good to see you. Happy Easter, everybody. NE says, Tom, thoughts on the Gemini credit card. So I actually did sign up for it, just because I'm quite intrigued by it. So when I get it, I'll let you know how I like it. Cynthia Beal says, hola, good to see you, Cynthia. Hope you are well. So we have to take a little bit of a detour. I hate kind of taking this back way here. So whenever I walk to downtown Miami from Wynwood, this is the way that I walk. But I don't know, not too big of a fan of this area. Edson says, good to see you, Tom, and happy Sunday. Happy Sunday to you too. Happy Easter. Hope you're having a good one. Alan Wilson says, good evening and happy Easter. Alan Wilson, what's up? Good to see you. So if you look straight ahead, you'll see the Paramount building here in Miami. Anthony says, Anthony says, it's a great credit card. I got $100 in ETH back already. Very cool. So supposedly there was a waiting list for it. Now, I'm not a big credit card type guy. I never carry a balance. But to be honest, I think that was one of the biggest mistakes I've ever made in my life. Speaking of buying a house, you know, even if there's one thing to be fiscally conservative, right, which I think I am, but it's very important that you build credit, because if you don't have an extensive credit history, you won't be able to qualify for a loan. And that is one of the biggest things that happened to me. You know, my banker's like, you almost have a too clean of a history, right? So sometimes when you purchase everything in cash, you don't open any credit cards. When you go to apply for a mortgage, one of the things they're going to tell you is, look, you know, how do we know if we could trust you if you don't have any credit history? So I think it's very important to open up at least one credit card, you know, put $50 a month on it and just pay it off in full. Hey, Cynthia Beal, this is Tom. Action Kid was in Wynwood. There was one wild and crazy place. Too risky for me. Very cool. I love Wynwood. Great place. Jamie Massetti, good to see you, my friend. Dutchman says, Tom, AK saw the Easter Bunny today. Hope you do tonight. Thank you, Dutchman. Hope you're well. Carol Reevy says, hello, Tom. Happy Resurrection Day. Thank you very, very much. Bernard Friedman says, hi, Tom. Absolutely the best to you and as well for you. Anthony's here. Alan Wilson, Edson, Cynthia Beal. NE says, also, I've learned that the home inspection doesn't cover enough. You should get specific tradesmen to come and look at the areas of the house as well. Yeah, so NE, that's actually a great point, and I agree. So for the most recent property that I bought, I think it's actually been 6 months now. So NE, to your point, I actually paid $300 extra. $300 in addition to the regular home inspection. I actually paid for an engineer to come out to the property to do an additional structural inspection, because if you're buying a property in Southern Florida specifically, what you don't want to get into is a situation where you're buying a piece of property where the foundation is shifting over time, in which case could cause structural damage. Point and example number one is the unbelievable, horrific tragedy that happened in Surfside, right? Because in Miami, it's essentially you're building a house on sand. So if you have a concrete block house and it's essentially been sitting on sand for almost 100 years, you want to make sure you get an expert out to the property to make sure the structural stability of the home and the integrity is intact. So I spent the extra $300. Some people don't want to spend the extra money, but if you think about it, buying a piece of property is one of the most expensive and one of the most biggest purchases you're ever going to make in your life. And I'd rather pay the extra $300 or pay the extra $1,000 to make sure I'm getting a good piece of property than to buy, a $500,000 piece of equipment or a house and then have a lot of big problems down the road. Perry, what's up? Running at altitudes, a structural engineer report is a good idea. Absolutely it is. Hey, I see photos from around New York. What's up, man? So photos, we're taking a little bit of a different way to downtown Miami because I believe there's a Miami Heat game going on. Samantha R is here, says, hey Tom, hi everybody, happy Easter. Thank you, Samantha R. Judy D says, hey Tom, hope you and everybody had a nice Easter Sunday. Likewise, Judy, thank you for being here. Rich says, happy Easter, good to see you, Rich. Jay says, happy Easter, Tom. I meet very few people that work as much as I do. Congrats on making the club. Hey, Jay, there we go. Love that, Jay. Cynthia Beal, everybody, good to see you. Brian says, happy Easter, welcome. Minraj, welcome. And I see 48 from New Zealand. What's up, 48? Marty Lewis says, happy Easter. Arturo Flores, good to see you. So we're gonna wait at this light, then we gotta cross. So speaking of the housing market, tomorrow, which is Monday the 18th, can't believe it's already the 18th, almost the end of the month. It's almost May. May is my birthday month, by the way, for anybody who is wondering. So tomorrow, the National Association of Homebuilders releases its housing market index for April. The consensus estimate on the street is for a 77 reading. That is 2 points lower than March. Ooh, I think that was just a hit and run. Not good. But we'll try to cross the street without getting hit. But essentially, a lot of the home builders right now, their confidence is decreasing because as interest rates rise, that tends to make home ownership less affordable. Now, here's what I mean by that. So even though we all know that 10-year US Treasury yield is really predicated, so if you want to understand where the 30-year note is going to go on a mortgage, you got to keep your eye fixated on that 10-year Treasury yield. And that 10-year Treasury yield finished the week last week at about 2.87%. And for the first time since 2011, we had that 30-year fixed rate mortgage over 5% for the first time. Now, even though that'll probably dampen some of the demand for homes, it reduces your amount of purchasing power in terms of your monthly payment because the interest rates are going up. So that's going to be a pretty big piece of economic data coming out tomorrow. But I think one of the things I wanted to touch on, and I'll give you guys a shot of, I think up this way is where Wynwood is, if you continue up here. One of the biggest things that I'd say, because I've been getting a lot of emails from people saying, you know, I don't want to FOMO into this market, I can't afford a house, but I don't want to rent forever. What are some of the ways that could help me get into a house or acquire assets? Because I think one of the biggest things for anybody or any family in order to try to build generational wealth opportunities is you need to start to collect and acquire assets, right? You really don't want to be a renter forever, but you don't want to over leverage yourself and spread yourself too thin. So one of the ways you could do this is something called house hacking. So that is essentially if you're looking at a single family home deal or you're looking at a duplex or a triplex, what house hacking is you acquire that property with a very low down payment, maybe 3 to 10%. You live in one of the units yourself and you rent out the other units, and your tenants will pay down the mortgage for you. And this is something I like to call inconveniencing yourself when you're young, because I say anytime you're in the age range of about 16 to 30 years old, what you want to do is increase your inconvenience as much as possible. So after you turn 31, you could start to decrease the amount of inconvenience, increase the convenience in your life, and pass it on to others. So when you're 18 years old, if you acquire your first property, or you're 25 and you acquire your first property, you know, you could afford to live with roommates. Let's say you buy a 4-bedroom, 2-bathroom house. Maybe you want to live in one of the bedrooms, but you charge your buddies $800 a month to rent the 3 additional rooms, and now you're cash flowing the property and you can afford that asset. Hey, Miss Brown Eyes, thank you so much for the $4 donation. Much appreciated. And happy Easter to you. Thank you so much. Hey, War Walkers, this is Tom. Watch yourself. Good to see you. Alan Wilson says, Tom, are you posting a list of sizes for your birthday? What's up, Alan Wilson? Good to see you. Tracy, good to see you. Smee Media says, I hope everybody is okay. Good to see you. Pineapple Water says, hey, Tom. Welcome. Chris Beeman says, I'm celebrating my birthday months. Very cool. Rich says, investigate HOA financial status minutes of meetings and engineering report if available for the deferred maintenance need. NMB045 says, happy Easter, Tom. Wishing you a bull week ahead. Thank you, NMB045. Much appreciated. And 48 is here from New Zealand. Welcome. Let's see where we are here. So we're approaching 1,000 Museum. The wind is picking up. Robert says, hey Tom, what do you think about Roth IRAs? So I think Roth IRAs are phenomenal, but the only thing is, as you increase your income, you don't qualify for those Roth IRAs. So let's say if you're a single person and you make over $150,000, I believe it is, unfortunately you don't qualify for a Roth IRA. But if you do, I would definitely contribute to them 100,000%. Tim Flynn says, housing market way overpriced now. Yeah, Tim, I think you're right, and I think the main cause of that is the Federal Reserve's policy of easy money and artificially low interest rates ever since the 2008 financial crisis. But you know, we heard from Fed Chair Jerome Powell that they are going to continuously increase interest rates in increments of 50 basis points at every single Fed meeting. And hopefully that'll put some pressure on single-family housing and multifamily, which will then in turn allow more participants into the housing market. But here's the thing. Here's the downside about that. Prices of homes may go down, but the cost of acquisition may stay the same or increase slightly, especially for people who don't have enough capital to put down a sizable down payment. Because, you know, if mortgage rates go to 10% again, you know, it's probably going to cost you the same in terms of your payment, your principal and interest, than it would be to buy now. But if you're a very well-capitalized investor, I think this is going to be the opportunity of a lifetime. Hey, 61. Just hoping for a bounce back in Wall Street this week. Well, it's earnings season. We are in the thick of earnings season. And I believe on Monday, we are going to hear from a slew of big investment banks and financials. Now, obviously talking about interest rates increasing, that's usually good for financials, but we have to understand which sort of banking or which of the big investment banks higher interest rates is going to impact the most in a positive way. And those are the banks that have most exposure to the United States. So I would say Bank of America. Hey, Tracy is here. Says inflation will always be more than your last pay raise. For most people, yes. For most people, yes. And Tracy, I think you make a good point because, you know, all of these politicians are like, hey, inflation is a good thing. Inflation is a good thing. You're making more money. Well, actually, you're not. So to Tracy's point, you know, we just had a CPI print of about 7.9%. So even if you got a 5% raise, you technically lost money. You technically lost money. Hey, Lena Sandoval is here. Good to see you, Lena. Welcome. This is Happy Easter. Good to see you, Lena. So we are outside 1000 Museum, which is, I guess you could call it one of the Billionaires Row buildings here in Miami that has a helicopter pad on the roof. Hey, running at altitude, says Tom, sellers not allowing for home inspections sounds like a flood of lawsuits coming. Yeah, so it's not that they're not allowing it, right? So they're always allowed to get the home inspection, but here's sort of where the negotiation tactic comes in. The sellers will often say, hey, you know, we're looking to accept an offer today. So if you don't make the offer and pounce on it right now, you know, we're going to accept somebody else. And everybody is in this FOMO state, this fear of missing out, that they flip out and they're like, oh my God, I'm going to lose this house if I don't put in an offer today and settle it down and lock it down. And so that forces a lot of people to say, okay, I'm going to waive the inspection, no contingencies, which is probably one of the worst decisions you can make in your life. Eyeglass Lady says Treasury Secretary Yellen is a concern. I agree, she is. Cindy Foley is here. Dutchman is here. Pamela says, I watch you every morning. Excited to see you live. Hey, thank you, Pamela. I appreciate it very much. And happy Easter to you. On this very windy night in Miami, this Easter Sunday. Tracy says, after inflation, they got lot physical. Hugsy says inflation is bad, but not as bad as killer whales. That is true. Ibrahim Azam is here. Good to see you, Ibrahim. Hope you're well. Ibrahim is joining us from California. So I think one of the best things you could do, and especially if you have siblings, right? So let's say if you come from, you know, a lower middle class family where you grew up in a household where you rented your entire life. You know, one of the things that you could do if you have a brother or a sister or maybe even a friend, what you could try to do is save up for a down payment collectively and split the equity in thirds and say, look, what we want to do is we want to try to at least attempt to build some sort of generational wealth creating opportunity. So let's acquire a 4-bedroom, 2-bathroom home. I'll live in one of the bedrooms, you'll live in one of the bedrooms, and we'll rent the 2 bedrooms out. So for example, I have a 2-bathroom, 3-bedroom home, and I decided that I am going to opt for long-term tenants. So what I was going to do originally is just do Airbnb, which actually cash flows a lot more than renting it out to long-term tenants. But everybody's situation is different, and I'll tell you what I mean by that. For me, as you guys know, if you've been watching this stream for a while, I tend to have to travel a lot for work. So about 50% of the time is spent here in Miami, and the other 50% of the time is spent in New York City. So for me to be able to manage the operations of an Airbnb business, it's not realistic for me personally right now. So if I know I have three bedrooms and the master bedroom has a bathroom in it, I can keep that room and rent out the 2 additional rooms to medical students for $900 each, and the property will automatically cash flow $200 over the mortgage. So not only do I drop my living expenses to zero, the tenants are actually paying down the principal of my mortgage and building equity. So if I do that for 10 years, essentially, and pay off the entire mortgage, essentially the house only costs me $100 grand, right? Because if you're having the tenants pay down the principal for you, the only amount of money you have in the deal is the equity you put in, which would be the down payment. And in that case, if you want to move out at a later date, you could rip the equity out of that deal and go buy an even bigger deal, which may be a 7 or 10 unit property. Hey, Tracy says, you say $40K for brand new 4-bedroom and the other guy is paying $800K? Well, the little guy with $40K house new will never possess more than $15K. He will never have a house. Could you clarify that, Tracy? I'm not sure what you mean. Cynthia Beal says, Tom, a foreign student may be good. Carl says, with inflation, will the banks finally offer better interest rates on savings accounts? They will, but here's the thing that it probably won't beat the hurdle rate of inflation. So you'll probably get a little bit of a bump in your savings rate, but it's probably not even gonna come close to the amount of hurdle that you have to overcome for that 7.9% CPI. So, and here's the other thing. Obviously the CPI, the way they calculate it today, is not the same way that they calculated it back in the 80s. You know, a lot of economists, a lot of analysts on Wall Street are saying if we calculated CPI the same way we did in the 70s and 80s, we would actually be looking at a double-digit inflation rate here in the United States. So take that with a grain of salt, if you will, but I think you should be preparing for 19% inflation. That's just my take. Could be wrong, but that's just my take. Let me know what you guys think. Cynthia Beal says, Tom, we have a 2-family. I am thinking of getting language students. They stay for 4 months at a time. But yeah, I think that's a good idea. I think that's a good idea, Cynthia Beal, because the way I think about it, when you're young, that's when you have the energy to put up with all the inconveniences, right? So it's nice to buy a house and live in it yourself, but the thing is you're gonna have to front that entire bill. But if you can bite the bullet when you're young, live with roommates or live with tenants, put up with all the BS that comes about with having to rent out your property, in 10 years you're gonna thank yourself, because your net worth is gonna increase at almost an exponential rate because you're having the tenants build the equity in your property. And so here's the good thing. Let's say you buy a house for 500 grand. You put $100,000 down, and over 20 years you have the tenants build up the equity in the property. When you go to sell that house, if you do a cash out refinance, you actually don't have to pay any taxes on that money, and you can roll all that money into another deal, right? So the reason why I always like to stress on the stream why it's so important to try to control assets is because you can use those assets as collateral to purchase and acquire other assets. So that's what I'm trying to do with real estate. Down the line, that's what I want to do with Bitcoin. I actually want to try to collateralize the Bitcoin holdings I have to then leverage to buy maybe storage units, multifamily real estate, or really whatever investment I'm thinking about at the time. Smee Media says, yes, young plus no family or partner or kids. Yes, you are 1,000% right. Arturo says, do you rent the rooms in your house? I do. WW says, Tom, I'm faded right now as per usual. Love that. Pineapple Water says, Tom, I am a firm believer that we will go into recession by the beginning of next year. Every indicator is in place. Thoughts? Yeah, so I mean, I think you could be right. But I don't think we'll get there. I really don't think we'll get there, because if we look at the data, even though things look pretty scary right now, Americans' balance sheets are actually pretty decent, So, and that brings me to the next thing I was going to say, to your point. If you're worried about a recession, I think it's going to be really important for you to pay attention to this week on Wall Street. Why? Because the rest of the investment banks are going to report earnings. So why does that matter for us? Well, here's why it matters. Bank of America is one of the largest issuers of credit and debit cards in the entire United States. So if we want to sort of gauge the health of the American consumer in terms of their spending habits, I always like to be on that earnings conference call when Bank of America, Citigroup, and really any of the other major card issuers are reporting, because we could see if there was an uptick in spending. We could see if there's an uptick in balances that are remaining on credit cards. So if we're seeing an uptick in spending on credit and debit cards, but the balances on those cards are actually stagnating, if not going down, that's actually a pretty good sign. What we don't want to see is credit card spending going up, but the average balance on those credit cards going up simultaneously. What that means is that Americans are having a really, really hard time with their budgets, so they have to spend money on credit cards in order to sustain the way they live, and that could, signal to the economy that people are probably going to cut back on spending. So I think we'll probably get our answer tomorrow, because Monday Bank of America is reporting, BNY Mellon, Charles Schwab, and I think 2 other financials. So we'll cover that on tomorrow's stream for sure. Hey, Deja Vu, what's up? Good to see you, Deja Vu. Daryl, this is Tom. James and Carla and Hudson met Fernando at the St. Patrick's Cathedral. That's beautiful. Love St. Patrick's Cathedral. One of my favorite places on earth. Lily says hello and happy Easter. Good to see you, Lily. Happy Easter to you too. Ed T, my friend. Hey, Ed. Happy Easter to you. Says love your discussion and the views. New subscriber and happy Easter. Hey, Ed. Thank you, man. Really do appreciate it. And I hope I hope everybody had a great weekend, had a good Easter. Selfishly, I kind of took the weekend off, not gonna lie. I sort of just, sat around some of the coffee shops here in Miami and just sort of took it easy. I think I've been pushing myself a little bit too much. Hey, Action Kid, what's up? Our good friend AK that we actually had the pleasure of meeting 2 nights ago on the stream. Says this week is an important one for bank earnings, very insightful to gauge the health of the U.S. consumer. Bingo, Action Kid, I agree. So we're going to cover that. It's going to be a crazy week on the stream. There's going to be a lot to cover. Going to be a lot of show notes, and I will cover all of that in the Behind the Street newsletter. So if you guys like the sort of conversations that we have on the stream in relation to finance, well, you're going to love the Behind the Street newsletter that I write every single Monday or Tuesday. So if you want to know my thoughts on the economy, the housing market, U.S. equities, emerging markets, commodities, if you type !news, NEWS, in the chat, the Nightbot will drop the link to the Behind the Street newsletter. Punch in your email, make sure you punch in your email, and I will send it to you absolutely free every single week with my thoughts on the economy. Hey, Buy the Book is here. Says, hey, Tom and everybody. Happy Easter, Buy the Book. Good to see you. Eric says, hey, Tom, good to see you out. What's up, Eric? Paul says, do you think this week will open low or high? I actually have no idea. I think it's going to be a crazy, volatile week on Wall Street, mainly due to the earnings. I think IBM, AT&T, American Airlines, Blackstone, Tesla. So Wednesday, Tesla reports, and that's going to be a crazy day for the market. Santo, good to see you. James Romano, good to see you, James. Mr. Braden says, love Miami. 48 says, hey, why not, Tom? Good on yourself for taking some time out. appreciate that. War Walker, appreciate you. WW says, Happy Easter. Diana says, hey Tom, Happy Easter. All right, everybody, let's continue on our walk. And let's go to, I'm debating on if we should go to Bayside tonight. I think Bayside's gonna be a little bit too crazy. Laura E says, Tom, my hubby and I are getting credit card offers every week in the mail. We have no credit cards and toss these right out into the trash. Well, that's good. That's definitely good. So to your point, Lori, so it's good and bad, and I'll tell you why it's good, I'll tell you why it's bad in my opinion, but I'd like to know your opinion. So very early on, I made a big mistake. I made a big mistake. And for anybody who's watching, especially like Ibrahim, our moderator, Ibrahim Zam, I think he's like 18 years old, young guy. I always stayed away from credit cards. Never signed up for one, didn't want one. But here's the thing. You gotta sort of play the game. It's sort of like, finance is a game. It's all a game. A lot of it's smoke and mirrors, but you gotta play the game if you wanna get ahead. So the right thing to do is live on less than you make and pay for everything in cash and things like that. But if you want to acquire assets, if you want to buy a property, you got to have a credit score. And you know, even though I was very well capitalized, I was making a very good income. When I went to purchase my property, I had a really, really hard time getting a loan because the bankers were like, look, you make a great income, you have a lot of money saved, but your credit history is only a year old. So I got, I think, a 3.1 or 3% interest rate. I could have gotten an even lower interest rate than that, but they charged me a little bit more because of the credit risk. And they said, due to the fact that your credit history is less than 5 years old, you have to put down 20% down on the property, no questions asked. Non-negotiable, or they wouldn't have given me the loan. And that was a big bummer for me because I only wanted to put down 3%. I wanted to leverage the property like crazy, which is generally is not a good idea. But if you're very well capitalized, it's a good idea to leverage the property, especially if that property will cash flow, because then you can use your savings to acquire other deals. But I had to put 25% down or 20% down on the property, which I guess is not the end of the world, but I didn't want to put 20% down. I mean, that's a lot. It's a lot. I had to write a check for it, but you know, at the end of the day, I'll still make money on the deal, but I wanted to free up more capital to acquire other deals down the road. Hey, parking full time, what's up? Says you have to be really smart about how you use your credit or debit cards, otherwise they will sink you. Yeah, I think that's a really good point. Parking full time. And so parking full time makes a really good point in the chat. I like that comment a lot because when I went to college, obviously I was in New York City. You know, I was playing college soccer, so you can just imagine all of the distractions that goes into being a college soccer player in a city like New York, where you know, you could be going out partying, the bars. So I'm like, you know what? I'm just going to refuse to get a credit card because I know I'm going to spend the money. So it's sort of like an out of sight, out of mind thing. But even though I didn't spend a lot of money and I saved a lot, it also burned me on the back end because I didn't have enough credit history when I went to go get my first rental property, and it wasn't good. Because look, with my income and my savings, the way I structured the deal, I'm like, look, even if I put down 3% on this property, the property's still going to cash flow. And those are really rare deals, especially in this type of market. So when I was talking to the banker and he's like, no can do, can't do it, and he made me put 20% down, I was kind of bummed. But I was also kind of happy because if you think about what caused the 2008 financial crisis, it was all of these financial institutions giving loans away to people that were not qualified. So for them to have a hard stop on me and say, look, even though you make a good income, even though you have good savings, you don't have at least 5 years of credit history, you got to pay us up 20%. So I thought that was pretty good. Action Kids says many people get rich using other people's money, borrow at the lower interest rate, and invest the money. You can buy with a credit card right after your closing date and repay it on the due date. Yeah, you're right. Yeah, Action Kid, that's probably my biggest regret, is not building a credit history sooner. I was a little bit too conservative on that. Hey, EBITDA, welcome. Happy Easter to you too. Good to see you, EBITDA. And the ABX girl is here, says happy Easter. Thank you, ABX girl. Bob says always keep your credit utilization about 30%. So I did hear that. Bob. That was another one of my mistakes. So Bob, to your point, when I first signed up for my credit card, my first credit card, my limit I think was $1,000. So I would put all of my expenses on my credit card, which was like $900 a month, and I would pay it off in full, but my credit score was still getting dinged because I didn't know anything about the utilization. But that's, I guess that's the advantages of being an 18-year-old kid. Local CA2 says, hope Dave Ramsey is not listening. Yeah, so I mean, look, I love Dave Ramsey. I think he's a great guy. But, I mean, he's like too uber conservative, because during the 2008 financial crisis, Dave Ramsey went broke. And the reason why he did that is because he was over leveraging his properties. But there's no problem with leveraging out a property if you have the appropriate capital to back it up, right? So if I bought a house, and this is just, these aren't my real numbers, this is just speculation. I'm just gonna give you an example. Let's say if I buy a house for $500,000, but I have $1 million in the bank. Why should I, if anybody is in investment banking, or there's something called the present value of a dollar calculation. So if I have $1 million in the bank and I want to buy a property for 500 grand, and let's say inflation is running at 7.9%, but I could borrow at 2.5. If I pay the property in cash, am I actually losing money on the deal? Or is that a good deal? Or if I put 3% down, leverage out the property, and borrow money at 2.5%, if you do a simple present value of dollar calculation, you're actually getting free money. So in the instance of, God forbid, something goes wrong, you have the excess capital to back up your loan. Let's say if you lose your job or something like that. But why would you pay $500,000 for a house in cash when you know you could borrow money at no cost, right? That is called utilizing leverage in a good way. What you don't want to do, and which is what Dave Ramsey says, what you don't want to do, which I agree with, you don't want to put 3% down on a property if you only just scrounge up 3% to put down and you have no other cash available, right? That's not what you want to do. That means you're over leveraging. But you could take on a lot of debt if you have a lot of money to back it up, which I think is good. Ashley says, correction, Tom, Dave Ramsey didn't go broke in 08. He went broke 2 times back in the 80s and 90s. Ah, you're right. But look, I think Dave Ramsey is great. I got nothing wrong with Dave Ramsey. But I'm not gonna pay cash for real estate when I can borrow money for free. Not happening. SME Media says, Tom, did 20% down payment allow you to avoid paying mortgage insurance? Yes. So if you put 20% down on a property, you don't have to pay the PMI. Hey Bernard, good to see you, my friend. H2O Dave says, why not invest in Reits and let someone else take care of the maintenance? Yeah, so there's a couple. So the only REITs that I own are REITs that are geared towards the tech sector. So a REIT is a real estate investment trust, and I own like the cloud computing REITs. I think if you just have exposure to the paper, you don't get you still get tax advantages of real estate, but you don't get all of the tax advantages of real estate. So for example, let's say you buy your first deal, your first single family home, and it goes up $300,000 and you sell it in 3 years, you're gonna make all of that money tax-free. You don't have to pay any money, you don't have to pay any taxes on your first deal if you sell it up to $250,000. Then every deal after that, you could just sell it and roll that money, as long as you roll that money into another deal, that it goes untaxed, right? So you're deferring those taxes down the line. But I have nothing wrong with REITs. I think the only thing is you still get tax advantages with the REIT, but not all of the tax advantages and the maximization of owning your own property. And I think the biggest downside is you can't live in a REIT, right? You can't log into your Charles Schwab account and take a shower. But if you own property, you could do that. Hey, John is here, so just joining in. Good to see you, John. Hope you're well. Tracy says the next guy says I will lawsuit. Anthony says I'm all in on physical gold. Yeah, so I've been talking to a lot of managers that are saying the same thing. I don't own any gold, but if we do crack all-time highs, I will have to buy gold. The Bandit says, hey Tom, how is your Spanish coming along? It's actually coming along pretty decently. Corey says REITs equal dividend income. They do. Yeah, so REITs, the way they're structured, they have to distribute the majority of their profits via dividends. And that allows them for the tax advantages and things like that. But John, good to see you. Let's see who else we have in the chat. Robert says, do REITs give you monthly income? Yeah, so a real estate investment trust, the way they are set up is a very tax advantaged way, but in order for them to gain all those tax advantages, they have to distribute the majority of their earnings via dividends. EBITDA says, Tom, did you end up looking into Delaware? So I didn't have time. I got to screenshot that. But EBITDA, I will look into that. So EBITDA, if you don't mind me asking, what are some of like the top 3 benefits of that? Because I'm definitely not as well versed in that as you are, but I would be interested in hearing more. The Bandit says, any investment app that you recommend, what do you personally use? So I don't really use any of the, I guess you could call them the more discounted broker dealers like the Robinhoods. I use Interactive Brokers and Charles Schwab. I think that all the other ones are kind of nonsense a little bit. Hey, Teresa Roberts says, happy Easter, everybody. Hey, Teresa. Jay says, gold is $11 away from 2,000. Indeed it is. Hyatt says, hey Tom, happy Easter. Always love the Miami streams. Very scenic. Hey, thank you so much. Kurt Flirts says, happy Easter. What's up, Kurt? Good to see you. Dutchman is here. Welcome. Cindy Foley says, good night all. Short visit tonight. Heading over to the family. Yes, please have a great Easter. Please head over to your family. I think we're going to head to Brickell now because usually by the time we get to Brickell, it's too late. And I do want to walk around that area. But Kurt Flirt, Jay, welcome everybody. Hope you're doing well. Local CA2 says, have you thought about doing a podcast? I think these streams are kind of like a podcast. The only issue with the streams is they're only good to watch while they're live. Not many people will watch the streams. on a replay, which I don't think is meant to be watched on a replay. But maybe down the line we'll do a podcast. Maybe down the line. I think that'd be interesting. Tracy says, taking over the world from California. Very cool. You know, there's a lot of people out for Easter Sunday. I'm actually kind of surprised. Jay, very nice. Jay, did you work today or did you take the day off for Easter? Photos from around New York, yeah, that's true. So I think the biggest piece of news, well, not really news, but the biggest event on Wall Street this week, I think we could all agree, aside from all the housing data that we're going to get, is Elon Musk. So Tesla is reporting earnings on Wednesday. They're projected to absolutely blow out earnings, by the way, but I have a feeling that the vast majority of the questions on the earnings conference call are not even going to be related to the company. It's probably going to be related to the big fiasco that's going on with Twitter. So we'll just have to see. Obviously, Elon Musk is in the process of a takeover bid for Twitter. I think the vast majority of the board of directors at Twitter are declining Elon's offer, but supposedly he has a plan B. So everybody be on the lookout on Wednesday, because maybe we'll find out just what that plan B is. But speaking of Tesla and EV companies, if you guys want to read the cover story of this week's Investors Business Daily, I think it's almost a prerequisite, because all these politicians and investors and everybody wants to talk about ESG, mandating cleaner energy, which I actually agree with. I want a cleaner planet. I want to move away from oil and gas. I want to move away from coal. But it seems like everybody has been so laser focused on that, where they forget about, okay, what goes into making these lithium-ion batteries for EVs? And as of right now, a lot of economists are predicting a major shortage of all of these rare earths that are going to be going into making these EV batteries. Oh, that's so cool. The Paramount building says Happy Easter. That's awesome. Let's actually check that out real quick. We'll walk around the block and we'll check that out because that looks cool. So here's the bad news. The bad news is that if you want to mine all of this lithium and other rare earths that go into making these batteries, what kind of stinks is that a lot of the rare earths are located in countries where they really don't mine these rare earths in the most sustainable way, unfortunately. And in some cases, there's actually been reports of a lot of slave labor and child labor in a lot of these lithium mines and cobalt mines, which is horrible. It's egregious. I mean, you wouldn't think that in 2022, you would have places around the world that are utilizing child labor and slave labor to mine precious metals and rare earths, but it's absolutely true. It's horrible. So if we as a country are so concerned about environmental and social governance, ESG, I think we really have to look in to where we're getting and buying all these rare earths from. Do we want to be buying cobalt or lithium from a mine that is coming out of the Democratic Republic of Congo, where they're using child labor to mine those precious resources? I don't think so. I wouldn't want to buy a car like that. And I think very seldom or very few people are actually talking about that. So kudos to Investors Business Daily for that article. And not just the sustainability of mining, but there's not enough supply. There's not enough supply of these rare earths and these precious metals to go around. So that could cause even more supply chain shocks and increase the price of these already major expensive EVs. John K says, I agree. Good to see you, John. So check out the Paramount building. Let me know if you guys can see that. It's all lit up for Easter. Very cool. Rodrigo says, well, in Brazil, the minimum wage per month is around $250. And investors would love low wages because it's better for them. Most of them don't care. I wouldn't say they don't care. I wouldn't say that. But I do understand where you're coming from with that. Hey, Roy S. Good to see you. Roy S. says, Tom, but the multicultural companies also continue to extract rare materials from those places. You're right. Hey, Ken Glass. Good to see you, my friend. What's up, Ken? Let's see who else we have. I see Roy S., Deja Vu. Hey, Al Baker. Are you talking about stable coins? My chat is going too fast. Hey, Tim Murray says Miami's looking like paradise. Thank you, Tim. Frank Gonzalez says, Tom, I keep hearing internally of strong numbers, but what is your forecast for IBM's report this week? So I don't have a conclusive forecast, but I'll tell you what I'm going to watch for. I'm really going to watch for the growth in subscriptions of their cloud service. And I also want a little bit of clarity on the Watson unit. So as we know, IBM actually sold off their healthcare unit of Watson, or IBM Watson. So what the main thing I'm looking for is how far along are they and how much of success are they seeing in their go-to-market strategy? Because there's so many changes going on at IBM. And I want to see if there's actual execution. Rodrigo, good to see you. Says, I'm saying that because I live in Sao Paulo, and even when investors can pay a better wage, they don't to save money, which is sad. Yeah, Rodrigo, that is sad. That's horrible. But thank you for watching, Rodrigo, and thank you for those insights. Yeah, so I think Rodrigo makes a good point. So I guess it comes down to, is ESG a real thing, or is this just a virtue signal thing by Wall Street and many of these money managers? Because if you really want to be sustainable, these are the type of things that we need to address. Hey, Michelle McGraw, what's up? Happy Easter, Michelle McGraw. Good to see you as always. John K says iPhone 13 mini is awesome. Good to see you. EBITDA says EBITDA says it is where multiple investors each hold an undivided fractional interest in the holding of the trust. The trust is established by a professional real estate company, referred to as DST sponsor. You could also 1031 into them. Interesting, EBITDA. You know, I may look into that. So I think it was you, EBITDA, that was talking a little bit about the storage units. So I want to look into that as well. I may, down the line, buy a pretty sizable plot of land to build like a storage facility on, like a storage unit. I'm not sure who was telling me about it, but it piqued my interest. I have looked into it in the past. Hey, Ice is here. Welcome, Ice. Guys, check out this full moon over Miami. It looks insane. Ice says, hey, Tom, happy Easter. Thank you, Ice. Virginia is here. Good to see you, Virginia. Mike C. says, Tom, you can use a $250,000 exemption on a home sale several times as long as you space them out 2 years or more. Wow. Well, there's another advantage. That's awesome, Mike. RJ says Tom will be around for the F1 races there in 3 weeks. So I don't think so, but this week is Miami Tech Week. So that's probably why there's so many people here. There's so many tech workers flying in from Silicon Valley, from New York for the Miami Tech Week. Yeah. MBN says, where is it? So this is downtown Miami. Ken says, hey Tom, happy Easter, thank you. Photos from around New York, welcome. It says storage units, everyone who stores items ends up storing it for. Nice. Hey, Design Ideas. Welcome, Design Ideas. Says, hey Tom, this could help. Did you know rechargeable carbon dioxide batteries are 7 times more efficient than lithium-ion batteries? So I think that's fantastic, but what is the scalability with that? Because I think that's one of the, I was watching an interview with Elon Musk, and he was talking about all different forms of renewable energies that are great, but the main issue is the scalability component. So I'm all for renewables, but I think the biggest thing is the scalability component. Hey, Parking Full Time is really enjoying the stream tonight. Thank you so much. Mike C says that's to pass primary residence rule, but if you pass that, you can roll it into another property. That's fantastic. That's awesome. So speaking of crazy overpriced real estate, so we're about to come up on the Aston Martin building, and there was actually a very interesting article in Forbes this week about the Aston Martin building, and I think it has 391 units. And as of last week, 90% of the building is totally sold out, with I think $100 million in sales last month alone. So that really gives you an idea of how crazy this market is. And something we've been talking about a long time on the stream is that it seems like the vast majority of buyers in this market are of ultra high net worth or institutional status. So if you're gonna buy a $12 million, $3 to $12 million apartment in the Aston Martin building, you're probably an ultra high net worth individual, right? And one of the things that we've been seeing that even a lot of members of Congress are calling out and they're not too happy about are large institutional investors, one of which, talking about Reits, or real estate investment trusts, is Invitation Homes. And Invitation Homes, they're increasingly buying single family homes in all cash deals, out-competing individual investors like you and me in order to rent those homes out for the cash flows. Now, it's a good business model, but here's the issue. It's essentially turning or helping turn the United States into a renter nation, which is something that we don't want. Hey, Nicole is here. Welcome, Nicole. But if you guys are enjoying the stream tonight, feel free to leave a like on the video and subscribe if you are new. Melee says, good evening from Scranton, Pennsylvania. Tom, happy Easter. Everybody, thank you so much. Ed Dunkel, welcome Ed. Give me 1 second, guys, quick intermission. I have to get a drink of water. I did finally bring the water bottle, as crazy as that sounds. But I got the water, finally. How many days have you guys been telling me to bring a water bottle and I just have totally disregarded it? Today is not one of those days. Today is not one of those days, guys. So I appreciate everybody in the chat telling me to hydrate. I really do appreciate it. All right, we will continue on. And walk across the bridge to Brickell. But if you guys want to read and sign up for the Behind the Street newsletter, where we are going to be talking more about the U.S. equities market, I give a complete recap of US equities and emerging markets every week. Please scan the QR code and it'll bring you to the sign up page for the Behind the Street newsletter. And it is a free financial newsletter I send out every single week. And we'll be sending it out tomorrow on Monday. And appreciate everybody signing up for it because we have over 800 readers and it is much appreciated. So thank you guys. Hey Tracy, good to see you. Bernie Williams is happy Easter, everybody. Hey Bernie, what's up? Always a pleasure to see you, Bernie. Hey Victor says hello, I'm new, happy Easter Sunday. Thank you, Victor. And thank you for joining the chat, and I hope you had a great Easter weekend with you and your family. John says hydrating is important. NMB045 says people have a point in being cynical of capitalism when ordinary folks have to compete for real estate with multi-family property developers. Yeah, so NMB045, I think that's an interesting topic to explore. So here's where I would give a little bit of pushback to that. Hey Con, thank you so much for the $5 donation. It says hello from Minnesota and happy Easter. Well Con, you were too kind. I appreciate the donation and thank you for supporting the channel. Much appreciated. So NMB045, here's where I would give a little bit of pushback to that. Because everybody blames capitalism for all of the problems that we're experiencing in today's world. And I would say if we had capitalism, we wouldn't be experiencing any of these problems at all. But essentially, central banking and money printing and fiat money has created a society, or continuously creating a two-tier society where you have extreme haves and extreme have-nots. Now, the extreme haves are the people that know how to play the money game, and the have-nots are just everyday working people like you and me. So here's what I mean by that. Capitalism would have let all of the banks fail during 2008 financial crisis and not use taxpayer dollars to bail out the banks. Because if I start a business and I go bankrupt, I lose all my money. But if you let all of these Wall Street bankers gamble with everybody's money in proprietary trading, lending out loans to people that can't afford them in order to make great commissions and collateralize these debts in the CDOs and sell them to other banks and destroy the financial system, if governments come in and bail these people out, well, have they really learned a lesson? Well, no, they haven't learned any lesson at all. So this type of activity will continue until no end. The other thing is central banking. So the Federal Reserve has kept interest rates at artificially low levels. Check out this plane coming here. The Federal Reserve has kept interest rates at artificially low levels since the 2008 financial crisis. Now, that's not capitalism, that is crony capitalism providing massive stimulus to the system. The Federal Reserve, if you look at the Federal Reserve's balance sheet, and I actually gave you guys a link where you can look at the Federal Reserve's balance sheet in real time, if you type !news, NEWS in the chat, I believe it is in article number 15 where we talk about the Fed balance sheet. So the Fed balance sheet, the Federal Reserve has essentially been buying mortgage-backed securities and US Treasuries since 2008. And essentially what this does, this bond buying phenomenon, it puts pressure on yields, right? Because if we understand the correlation between bond prices and bond yields, we would understand that there's an inverse correlation there, right? So if you have the Federal Reserve putting a bid in the bond market, it's going to suppress rates, it's going to suppress yields. And if we look at the Fed's balance sheet now, it's approaching $9 trillion, right? So at one point, the Federal Reserve is going to have to unwind this balance sheet. They're going to have to let these securities fall off the balance sheet to maturity, which I think is what's happening right now, and we're seeing yields spike across the board. Just look at that US 10-year Treasury yield. It's 2.9%. And in turn, mortgage rates are 5%. So I think if you allowed free markets to work without central banking, that's real capitalism. I think a lot of the financial markets now are managed markets, where anytime we have a stock market correction, we have to drop yields to zero. We have to start, more bond buying and all of this nonsense. I think that's called crony capitalism or corporatist socialism, which is exactly what we don't want. What we want is pure free market capitalism that will solve all of our problems, not corporate socialism. Anytime Goldman Sachs wants a bailout, what does the government do? They tap me and you on the shoulder and say, hey guys, pay up a little bit more in taxes so we could bail out, Lloyd Blankenfein over at Goldman Sachs so he can get a $12 million bonus when we're scraping by, just trying to get ahead. And I think that's called corporate socialism. Oh, hold on, let me just cross the street. I just want to make sure there's no cars coming. But I think we're good. So if you want to watch a good video, here's a really, really good video I'll give you guys. It's called I Am the 1%. So if you go on YouTube, where we are all located right now, and you type in I Am the 1% by Peter Schiff, you'll see the interview at the Occupy Wall Street down at Zuccotti Park in Lower Manhattan, where I used to work. Well, I used to work on Wall Street, near the Deutsche Bank. And you'll see Peter Schiff interviewing a lot of the Occupy Wall Street protesters, talking about the Federal Reserve and how they pretty much created the financial crisis. Hey, Great Walk. What's up, Great Walk? Good to see you, my friend. Hey, Williams is free market cap. Mike C says no bailouts, agreed. John says, Tom, my question is there going to be an electric charging cars in the future? What happens to the gas stations if all electric cars come, then no more gas stations? Please let me know. Well, I think there'll always be gas stations, but I think just less and less. But I don't know about that. I don't know if there's going to be absolutely no gas stations. I think there'll still be gas stations, but let's say if 20% of America's population has an EV, you're probably going to see the same reduction in fuel stations, I guess. All right, let me stop to the side and read some of the comments as we are approaching the Aston Martin building. So this is the building we were just talking about, everybody. And this building, I think, has 391 units, and it's not even complete yet. So think about this. The building isn't even built, and it's 90% sold out. How crazy is that? I'm going to show you guys right now. Hey, Bernie Williams, what's up? Good to see you. Hey, Lottie says, we still need snacks for the road. I know. All right, everybody, so this is the Aston Martin building right here. That it is 90% sold out, and the thing is not even built yet. Hey, Cheryl says, Tom, I love your take on crony capitalism. Does the government do anything well? Honestly, not really. Maybe the military, they do a good job keeping us safe, I guess. Al Baker says, do you know what the HOA is going to be? Ooh, that's actually a good question. Probably a lot. So, Al, if you Google Aston Martin building Forbes, you'll see the article. I think it came out either yesterday or last week. I forget. I read it yesterday. But, I can't believe this thing is, look at the basement of the building. It's not even complete yet, and the thing is 90% sold out. It's insane. Perry says, Tom, is it a mixed-use property, the Aston Martin building? So I'm not sure. I think it's only condominiums. But this is the basement here. It doesn't look like there's any retail. This just looks like it's going to be a big lobby and a parking garage. Michelle McGraw, happy Easter. MBN, good to see you. Yeah, for use is the banks made out like bandage. JP Morgan Chase made out the best. And they just used Lehman Brothers as a sacrificial lamb. But JP Morgan Chase made out like a bandit. Hey, Strider 1239 says, Tom, I'm wondering what percentage of the building is foreign owned. Probably a lot, actually. Probably a lot. So here's an interesting thing. I was talking to one of my buddies that's a real estate agent down here. And if you look at the main, like, so in New York City, we have what's called Billionaires Row, which is, it's not exclusive to 57th Street, but it's pretty much all 57th Street. So if you go to New York City, it's 57th Street. That whole block is what you call Billionaires Row. But in Miami, we have something similar, which is Sunny Isles Beach. But ever since Miami's been getting so popular, we've been having these sort of billionaire-esque buildings go up. And the Aston Martin residence is one of them. So this is the Aston Martin building. It's not built yet. But if you talk about Sunny Isles Beach, the vast majority of the buyers in Sunny Isles are Russian buyers. So foreign buyers, if you look at Billionaires Row, the vast majority of those buyers are also foreign. So I would assume that trend would continue here in Miami as well, but I'm not too sure about the conclusive data on that. Hey, Bob says, Tom, the Aston Martin Tower will have a rooftop helipad. That's insane. So 1000 Museum also has a rooftop helipad, which is just nuts. Cooking says, is it actually all billionaires? It's probably the majority of it is ultra high net worth. So I would assume, I mean, think about that for a minute. You know, if you buy an apartment in Manhattan for 30 million bucks or more, you know, what is your property tax bill going to be on that? So you're probably a billionaire, if not ultra high net worth. And I think ultra high net worth is what? Like 200, is ultra high net worth 200 million? Cheryl says, normally inflation is good for real estate until the bubble pops. Do you think the real estate will eventually take a hit? Yeah, I definitely do think real estate will take a hit. It's already taking a little bit of a hit. But this week, we'll probably have all the answers to our questions in relation to housing starts. So one of the biggest pieces of economic data I like to look at are new housing starts and housing permits. Because if you're a builder and you're going to spend thousands of dollars on a building permit, you want to make sure that there's demand for those buildings. So usually when we see a big drop off in building starts or permits, that usually can forecast to the economy or, you know, any sort of participant that we could be seeing a slowdown, or that builders are expecting some sort of a slowdown. But I mean, interest rates on a 30-year fixed are 5% now. Hey, L is here. This is the very reason Kanye said he didn't want to buy a house. Good to see you, L. And happy Easter to you. Al Baker says, Tom, Aston Martin, the price range is $900,000 to $10 million. Wow, it's insane. So we're gonna walk over to Brickell now, but if you guys are enjoying the stream so far tonight, feel free to leave a like on the video and subscribe to the channel and join us if you are new. 4 uses ultra high net worth starts at 30 million plus. Copy that. All right, Tracy, we're gonna have to give you a little bit of a breather there. Jay says, I read somewhere that the average price of a new home is $500,000. So I think the median home price in America has crossed $400,000 for the first time in history, which is kind of crazy. Look, if you're a first-time home buyer, you should be welcoming higher rates, because I think the vast majority of people think about real estate the wrong way. They think, they only think about the payment. They focus on their monthly payment. Don't focus on the monthly payment. Focus on how much the house actually costs, right? Because over the long term, you want capital appreciation in your asset. So what I would do is make sure you save up a hefty down payment, because what a lot of people do, they're like, rates are so cheap, rates are at 2%, rates are at 3%. I could afford, quote unquote, I'm using air quotes here, I could afford a $500,000 piece of property because I'll put 3% down. I mean, the only reason why you could afford that property is because rates are so low. And that goes back to my original point. That crony capitalism and artificially low interest rates are what's propelling asset prices higher. If you print money and you have the Federal Reserve buying mortgage-backed securities and U.S. Treasuries, that is going to make the barrier to entry lower and rob savings from people. Because if you're saving money in this environment of low interest rates, you're actually losing money. You're not saving at all. Excuse me. But if interest rates go up and housing prices drop 20%, and if you were a person who did the right thing and saved a lot of money, well, now you're going to be able to scoop up real estate on the cheap, which I think is good, and I welcome that. Hey, Talvish is here. This is Walks from Wall Street. Hope you had a good Easter. What is up, Talvish? Thank you so much. Appreciate it. Mike C says, Tom, where do you think the U.S. be in 2022 if we had the banks fail? I think we would be in a better off situation. But here's the thing. So that argument always comes up, Mike. And people say, what if we didn't bail out the banks in 2008? People would be suffering. Well, yeah, of course. I mean, obviously, right? I mean, yeah, people would go through some pain. I mean, God forbid people go through a little bit of pain. And so what's happened is governments and central banks around the world, not only in the United States, it's the Bank of Japan, it's all these central bankers. Like, God forbid anybody has a little bit of pain, everybody flips out, and we have to print all this money to keep markets propped up. That's not free markets. And essentially what that does is it kicks the can down the road. So if we didn't bail out the banks, we would probably be in a recession for about 5 years. People would build up their savings, and the process would start all over again with better credit quality and lending standards. Because banks would know, hey, we can't do that anymore, or else we'll go out of business. But now, nobody's learned their lesson. But I would love to know your thoughts on that, Mike. Ed Dunkel says Sweden didn't bail out the banks and it was great. Hey, MJ is here. What's up, MJ? For you, good to see you. Pineapple Water, welcome. Ellis is happy Easter to you. So I'll show you guys the view from the bridge here. Unbelievable view. Hey, Lodi is here. Good to see you. Hey, John says, Tom, I enjoy your live streams every night. Thank you, John. Much appreciated. So check out the W Hotel here, everybody. It's one of my favorite buildings in Miami. Oh. I think the bridge is about to go up. Let's get off the bridge before it goes up. All right, we made it. Yikes. But at least we'll get to see what kind of massive boat is going to come through here. Yeah, Action Kid is like, get off the bridge before it goes up. For sure, man. I mean, jeez. Hey, Daniel Rodriguez says, Tom, are you living in Miami right now? So yes, we are living in Miami right now, but it's going to be a 50-50 between New York and Miami. But Daniel, happy Sunday and happy Easter. Roy S. is Bridge Thriller. Action Kid, good to see you.
No, you're not. You're an Iranian princess.
Hey, Lisa, what's up? Says, Tom, you may want to catch the 60-minute segment about cybersecurity. I would love to see that, Lisa. If you have a link, please drop it for us. Yeah, Mike says, Tom hasn't moved that fast since soccer semifinals at John Jay. Hilarious. Hey, Daniel G is here from Buenos Aires, Argentina. Good to see you, Daniel. So guys, we're gonna watch the bridge go up here. So this is the drawbridge that is going up here in Brickell. But Daniel, thank you for joining, and I hope you and your family had a very happy Easter today. Hey, Cynthia Beal is here. Welcome, Cynthia. Hey, Nicole says, going to bed already 4:20 a.m. Oh my God. Well, thank you for being here. Lodi says, Tom, where's your hometown? New York. Long Island, New York. Patricia Ivory is here. Good to see you, Patricia. Welcome. Wow, look at this thing, guys. Man, that thing was massive. Elle says, love the soothing sound of your voice. Well, thank you for saying that. Much appreciated. That was a massive yacht. I guess you could call it a yacht. Let's see if the bridge will... Hey, Gregory's here. Says, nice. What's up, Gregory? Good to see you. Lane says, what is the weather temperature in Miami Beach? I think it was about 82 degrees today. It was a really nice day. A really nice day. Yo, we have Caleb here. Says, thank God Will Smith's out of the frame. We've got the ice tray lane. Interesting. Paul says, do you like coffee? Love coffee. Love coffee. IKEMATSU says, hello from Scottsdale, Arizona. Good to see you. So the bridge is going down now, and it doesn't look like the traffic is backed up that bad because everybody is probably home for Easter. John, thank you for joining, much appreciated. But I think we covered a lot today. So for those of you who are just joining, we covered the earnings, a look ahead. So financials, it's going to be a big week on Wall Street for financial earnings. We have a lot of the big banks, and it's important to pay attention to the big banks, such as Bank of America and the like, because they issue a lot of the credit cards in the United States. So it is a good gauge for consumer sentiment and consumer spending. But the one thing we don't want to see is increased spending on credit cards simultaneously met with increased credit card balances. That is not good. What we do want to see is increased spending, but either stagnant or decreased credit card balances. And I'll give you guys one look at the Aston Martin building. Yeah, Daniel G says you missed Miami Tech this year. So Miami Tech Week is this week. It's going to be a great week. And now we got all the cars going back. So Action Kid, I'm not sure if you're still here, but if you are, did you buy one of those electric scooters to cruise around here? Or sort of what is going to be your main mode of transportation? All right, let's just get one more look at the Aston Martin building. So this building is not even complete yet, and it is about 90% sold out. There's about 391 units, and 90% of these units are totally sold out and accounted for. Kind of crazy to think about. Daniel Rodriguez is that bridge safe? Yes, it is safe. Well, I mean, at least I hope it's safe. Action Kids says I brought the electric scooter with me from New York. I'll probably bike and scooter around. Nice. So the only reason why I'm reluctant to skateboard around here, I don't know, it seems like the streets are a little bit too narrow, but I'll have to give it a try. So AK, you probably saw all the new bike lanes that they're building in downtown, which is good, but I feel like they need to extend them. All right, so now we are in Brickell. We are near the W Hotel. We are going to cross the street. Hey, Andy is here from South Korea. Welcome. So it's probably Monday already in South Korea. So speaking of Bank of America, they are reporting earnings tomorrow. This is Bank of America Tower down here at the Financial District in Brickell. Oh, and today we also talked about house hacking. So if you guys are just joining and you want to watch the replay of this stream, we did talk about one of the best ways for beginner investors to break into real estate, which is something called house hacking, where you could put down money on a home and have others subsidize your cost of living by renting out the spare bedrooms or doing Airbnb or something like that. And I really recommend this strategy for anybody who is 30 years of age or younger, because when you're 30 years of age or younger, it's probably the best time to inconvenience yourself the most. So if you can inconvenience yourself and live with roommates or live with others and have them pay down the principal on that mortgage while you're building equity in that particular property, I think that's going to be fantastic for your net worth going forward. So feel free to check out the beginning of the stream to listen to our insights on house hacking. Hey, 48 says Tom, it's Monday here in New Zealand, 2:30 p.m. Hi, well, thank you for watching. How's the weather in New Zealand this time of year? Hey, John, thank you for joining tonight, John. Appreciate it. Hey, Albany Upstate Walking Tour, what is up? Happy Easter to you, my friend. Albany Walking Tour. Miguel Gonzalez is here. Good to see you, Miguel. Oh, and on Wednesday, everybody, we have Tesla's Elon Musk is probably going to get berated with a bunch of questions about Twitter. It's funny, so Tesla's reporting earnings, but the majority of the questions on the earnings report is probably going to have nothing to do with Tesla. It's probably all going to be about the potential M&A activity with Twitter. But as we talked about last night on the stream, there is a potential other player coming in here with that Twitter deal, where I actually met Orlando Bravo of Thoma Bravo. So Thoma Bravo is a private equity firm that only specializes in enterprise software deals. And before I logged off on Friday, right across the Bloomberg ticker tape said that there was a pretty interesting rumor going around on Wall Street that Thoma Bravo is running the numbers on the deal of Twitter to potentially buy them. So we will see if that materializes or not. But if you guys want to watch an in-depth interview with Orlando Bravo at Thoma Bravo, I actually was able to sit front row and center at the 2022 Bitcoin conference, where I got to see the one and only Orlando Bravo speak. So if you want to see all my thoughts on that, if you type !news, NEWS, in the chat, the Nightbot will drop the link to the 2022 Bitcoin conference wrap-up that I wrote. I got to see amazing speakers like Michael Saylor, Kathy Wood from ARK Invest, my former CEO Marcelo, where he was the CEO of SoftBank Group before stepping down. So if you want to know my thoughts on that, please feel free to check it out. Hey, Jose is here. Welcome. Bernie Williams has watched what Musk did on TED Plan B. Could you drop that in the link? I got to take a look at that. I'm very curious to read more about that. All right, we will cross the street. Michelle McGraw, good to see you. Hey, Maria says hello from Sao Paulo, Brazil. Good to see you. Fantastic, Frankie. Says, why would anybody want to buy Twitter? So if I had the money, I'd probably buy it. I think Twitter is the best social media platform, but they've just done a horrible job of monetizing. So if Twitter could monetize like Meta or Facebook does, I think that would be the most powerful social media company in the world. Because in my opinion, I think users get the most value out of Twitter. Jay's like, you have any battery? Very low. Ooh, we finally got the light. So the lights in Miami are probably just as bad as they are in New York. 5-minute red lights. Hey, Dilbert says, hooray, the Miami Heat lead the series. So you're right, there was a Miami Heat game that took place tonight. Who are they playing by chance? Oh, check out the chandelier in this building. Fantastic, Frankie says, Twitter's user base is decreasing every year. Indeed it is. Well, I think that's what makes it pretty attractive for an LBO deal, right? So anytime you're looking to sort of do a hostile takeover or a leveraged buyout, I think the one person that I think of that has done that the best throughout history is Steven Schwartzman. So whenever we're streaming in New York, we always talk about Steven Schwartzman, and he's done really, really well with LBO and leveraged buyout deals. And that's when you take a company that has a lot of potential, but very incompetent management and try to improve the operational efficiencies of that company. And I think Elon Musk could do that with Twitter. You know, if you could monetize Twitter to make as much money and have the same gross margins as Meta or Facebook, I mean, I think it's game over. Cynthia Beale says, can something similar to Twitter be created? For sure. I think so. Lane says, what is the upcoming forecast for Miami going to be? I think it's going to be about 80 degrees all week, but it may rain a lot this week though. Yeah, parking full time says Twitter has so much potential, but it's very poorly managed. And I think that's why Jack left. You know, he'll never say that he left Twitter because there's egregious incompetence. I think the Twitter management team is unconsciously incompetent. And I think that's the worst part of being incompetent. Or the worst form of incompetence is unconscious incompetence or incompetence. Hey, Gregory says, it was this afternoon they played the Atlanta Hawks. Very cool. You know, I've never been inside the FTX arena, but I would love to go to the FTX arena very soon. Hey, Elizabeth is here. Says, hey, Tom. What's up, Elizabeth? Good to see you. Hope you're doing well. Always a pleasure. Now, here are one of the very few fountains in Miami. You know, the only time you're really going to see fountains in Miami is if you go to Sunny Isles Beach. Hey, FredX says, lovely night in Miami. Thank you, Tom. Thank you, FredX. Good to see you. Miguel Gonzalez says, so what days do you come back to New York? I don't really like saying when I'm going to be coming and going anymore, but I will be back very, very soon in New York, I promise. Elizabeth says, thank you, Tom. Hope you're doing well. I'm doing really good, Elizabeth. And happy Easter to you. We briefly touched upon the earnings outlook for the week, as well as we talked about house hacking. MJ says, Twitter seems very toxic. It's hard to balance free speech with instigating words by people in power that lead the real world violence. Interesting. I mean, I think Facebook, that's one of the reasons why I deleted my Facebook account, because the only thing that's going on Facebook is just a bunch of people arguing about politics, which I think is kind of non-productive for my time. So another interesting thing that I came across, so I was looking in Costco, right? And when we think about Costco, you know, you think about a staple company. But if you really look at the majority of the gross margins that are generated by Costco, it's from all of their memberships, right? So I think we could conclusively say that Costco is probably one of the first consumer staples-ish type companies to technically be a SaaS company. Because if you think about it, the majority of their revenues and the majority of their profits are generated not from selling food or selling goods and services, but it's generated by their revenues of their subscriptions or their memberships. So as a quick poll, who here in the chat has a membership to Costco? I'm just curious. Nick Rock says, we went to Costco the other day, spent $450 in no time. Yeah. That's crazy. On top of the membership, but wow, I think we're getting really lucky tonight. We have two lights at the same time. So on this intersection, you could cross diagonally, but I think I'm still too much of a newbie to Miami to be able to risk crossing diagonally. So we're just gonna cross this way. And I'll show you one more view of the W Hotel from this side. Otto says, I do have a membership to Costco. Ah, interesting. Diana says you do. Elizabeth says Sam's Club. Got it. Nick Rock says we have executive membership. Buy the Book says you do. Okay, so a lot of people do have it. Interesting. For You says membership here. So Costco Wholesale is challenging Amazon.com by keeping things simple. Limited selection, low prices, good execution. With just 7% of its sales online, it's the anti-Amazon. So listen to this. This is interesting. Costco shares have risen 3% so far in April alone to about $590 a share. The stock is up 63% over the past 12 months, while Amazon stock is off 9%. So when we talk about valuation metrics, and just in full transparency, and I think I've discussed why before, very seldom do I use price to earnings ratios, price to sales ratios when valuating investments. And I go into why if you read the Behind the Street newsletter, and we talked about this a little bit before on other streams. But Amazon and Costco are trading at very similar PEs. Now, why do we think that is? Is there some mispricing going on here in the market? I don't know. We'll write about it in this week's Behind the Street newsletter, but if you look at the PE of a Costco and a PE of Amazon, you would think, well, shouldn't Amazon have or trade at a higher PE or price to earnings because they have Amazon Web Services? They're not just an e-commerce company. Shouldn't it trade at a higher PE? Well, I don't know. Could there be some mispricing here? So Costco trades for 46 times projected earnings of $13 a share in its fiscal year ending in August, and for 42 times earnings in 2023. That's the highest price to earnings ratio for a major traditional retailer, just under Amazon's 2023 PE of 43. So almost the same PE of Amazon and Costco, which is interesting. But what about on an EBITDA basis? So Costco beats Amazon on earnings before interest, taxes, depreciation, and amortization, or EBITDA, trading for 22 times projected 2023 EBITDA, while Amazon trades at only 16 times 2023 projected EBITDA. So I know a lot of analysts like to compare Amazon and Costco. I usually don't. But I think of Amazon more as a tech play, because you guys know me. We talk about cloud computing all the time. So anytime that Microsoft reports earnings, anytime that Alphabet reports earnings, what do I always say? It's almost like I'm a broken record. I say the most important thing, or the most important metric to listen to in this earnings report is the cloud computing. So when we think about Microsoft, we could think about their Microsoft's Azure cloud unit. When we think about Google, we could think about the Google Cloud unit. But when we talk about Amazon, we could think about the Amazon AWS unit. And I think as time goes on and as the operational efficiencies increase at Amazon AWS, the cash flows that are generated from these specific units of cloud computing is going to be monstrous. So to give you a little bit of perspective here, oh, that's a really nice car. To give you a little bit of perspective here, Google's Google Cloud unit, I think, lost about $68 million. But if you really dig deep into the earnings report, every single quarter they lose less and less money. So I think, and you guys could fact check me on this, I think on an EPS basis or on an earnings per share basis, I think Alphabet, Google makes about, what is it, $24 a share. Could you imagine the day or the moment that Google's Google Cloud unit turns profitable? Imagine what that's going to do for their earnings. And I think a lot of analysts on Wall Street are really discounting this. I think they're not paying attention. So from a valuation metric, I think that it's possible that Amazon is a screaming buy here. But you guys know the style that I like to trade. I'm really a trend trader. I'm really a position size trend trader. So if the trend says one thing, I usually tend to stick with the trend. But let me know you guys' thoughts on that. Let me know your thoughts. Eddie L says Costco still treats share membership people like crap when you could share your Amazon memberships with your friends and family. Well, one of the things I like about Costco is that they treat their employees really well. So Costco has been known for treating their employees like gold, which I think is very good. But Eddie L, good to see you. Lodi says, as a single gal and only buying for one person, Costco and Sam's Club type places are not worth it for me. You know, I think so too. I don't have a membership there. Sometimes if I go with a friend, I'll buy some stuff. Robert A says, I was there last week, Costco, going to have a Valium before I go next time. Interesting. William says, love this, bro. Appreciation as always. Thank you, William. Yeah, Gregory says, Tom, Costco is only worth it if you have a family of 4 or more. I could see that. Because, I mean, if you're a single person, and how much is the membership to Costco? Is it like 60 bucks? I would assume the membership to Costco is like 60 bucks. And I'm sure you're not buying too many perishables where it'll be worth it for you to spend $60 in a membership to bulk up on things. NMB045 says Costco memberships for gas alone is worth it. Oh, NMB045, I totally forgot about the fuel perspective of Costco. You're right. Forever 18 says membership economy are growing very fast. When more and more merchandises the membership economy club, there is nothing different anymore. Yeah, so I think really the main person to thank for that is Mark Benioff. You know, he's the one who, hey, we got another drawbridge going up, everybody. So Mark Benioff is the CEO and founder of Salesforce.com, or ticker symbol CRM. And that is a major enterprise software company that really pioneered the subscription-based service for software, or SaaS, software as a service. And with software as SaaS companies, they have extremely high gross margins. So Nick says, Tom, you don't need a membership in New Jersey to buy gas at Costco. Did not know that. XOXX Bob's is Miami Avenue Bridges. So I wonder how many drawbridges there are in Brickell alone. Well, connecting Brickell to downtown Miami, I guess. Arturo Flores says, baby, diapers at Costco are worth it. Kids are leaving me broke. Oh my God, I can imagine. So what is the savings on that on a relative basis? How much would you say you realistically save on diapers at Costco? So this is Brickell City Center. Jack Tripper, good to see you. Very quiet for a Sunday night, probably because it's Easter Sunday. Everybody's sort of hanging out, having a good time. At home. Khan says, Tom, that's hence why I got married. Or when I got married, we had a Costco membership. Diapers are expensive, yeah. Well, I mean, I just found that intriguing that Amazon trades at almost the same PE as Costco. So I'll say that again. Costco beats Amazon on an EBITDA basis. So earnings before taxes, depreciation, and amortization, or EBITDA, trading for 22 times projected 2023 EBITDA, while Amazon trades at 16 times 2023 EBITDA. Its market valuation is $260 billion. But here's the thing, Amazon's market valuation is 1.6 trillion. So can we really compare these two companies? Probably not. Probably not. But it's interesting on a valuation metric perspective. Oh, I think the drawbridge just went up. Hey, Bob says, what kind of fish are that? I think those are koi fish. So this is one of the oldest bars in America right here. For you, says USDA prime steaks at Costco, so worth it. You know, I'm gonna stock up on a lot of steaks. I did just buy a barbecue grill for my house, so I'm super excited about grilling. Lodi says Trader Joe's is the best prices for groceries around Orlando for sure. Even beats Walmart prices 80% of the time. Yeah, so in New York, where I'm from, they love Trader Joe's. They're obsessed. These people are obsessed with Trader Joe's. I'm not a big fan of Trader Joe's, to be honest, but they definitely do have some good deals. Roy S. is, I always amazed to read some stories that we can find Rolex watches in Costco. Is that true? That's insane. I didn't know that. Roy S., is that true you can actually buy Rolex watches in Costco? Wow. Yeah, buy the books like I don't like Trader Joe's, me either, man. So during the pandemic in New York City, we used to have 2 or 3 hour lines stretching around the block in New York City just to get into Trader Joe's. Hey, Bowling is here. Good to see you, Bowling. Welcome. Jay's like, I gotta get out more. Ooh, Els is, Wegmans is my favorite supermarket. Yeah, Wegmans is fantastic. I believe there's gonna be a Wegmans coming to Union Square, which I'm pretty excited about. Where the old Kmart used to be. We're gonna stop for a water break. Hey, Charlie Richardson, good to see you, Charlie. All right, everybody, so to quick recap, on Monday, Bank of America is reporting earnings, Bank of New York Mellon is reporting earnings, as well as Charles Schwab. So we will be doing a full earnings recap tomorrow. Now, one of the major pieces of economic news we are getting tomorrow, Monday the 18th, is the National Association of Homebuilders are releasing its housing market index for April. Consensus estimate for a 77 reading, that's going to be 2 points lower than the March figure. The index has declined for 3 consecutive months as surging mortgage rates have made home builders less optimistic about the housing sector. On Tuesday, the Census Bureau reports new residential construction statistics for March. Economists project a seasonally adjusted annual rate of 1.76 million privately owned housing starts, roughly even with the February figure in 2006. And lastly, on Wednesday, we're going to cover the Mac Daddy Tesla with Elon Musk. But tonight, everybody, I'm going to sign off early. I do have to wake up to start the week. But I will be sending out the Behind the Street newsletter after the market close on Tuesday. So if you scan the QR code, I will send you a personalized financial newsletter, completely free, with my thoughts on the housing market, the U.S. equities market, the international equities market, or emerging markets and commodities. You do not want to miss it. So if you scan the QR code, you will also be able to read my in-depth analysis on the 2022 Bitcoin conference, where I had the pleasure of having a press pass. So everybody, please have a very happy Easter. And I will see you all in the next one. NNB045, thank you so much and happy Easter. Samantha R, make it a great week. Faith, Sally, Al J, Action Kid, 18, I appreciate you. Michelle McGraw, thank you for being a great moderator. Lizzie, Nick Rocks, Charlie Richardson, Lodi, MJ, Gregory, and to the mighty bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. So everybody, put a smile on your face. It's going to be a fantastic week. So let's get ready to rock, and I will see you all in the next one. Have a good night.